Hey traders, Kill Stokes here, and I want to do a quick video. I just wrote a post for my blog, and I'll be sharing it on the Trade Empowered homepage as well. What happened was I got a question on Friday's session. Friday's live room session was really laid back. I had to leave early to go out of town, and so I wasn't interested in doing too much trading. So we did a lot of Q&A, and one of the questions that came up was on gap trading. And well, I'm roaming around the markets right now because I'm bored. About to watch another episode of House of Cards, and that's a very, very good show, by the way. But I was just going around the market somewhat on the lower time frames and saw a good opportunity to explain a little bit what I talked about and really how to trade gaps. And on the original post, I was looking at the range bar charts because I really like those charts. I'm going to look at it on the 5-minute chart right now, just because I know everyone doesn't have access to range bars, and this makes it a little easier. Now, I want to preface this by saying that I am not a gap trader. So I don't have a lot of back testing on it. I don't have hard numbers. I can't tell you, hey, the gap's filled 90% of the time or 80% of the time. But what I can tell you is through my experience in the market, what I've noticed is that the majority of the time gaps are formed, we'll see those gaps filled, or we'll see a retracement back into some type of structure zone near those gaps. And these gaps in the currency market, and this is for currency market. We'll see a lot more gaps in stocks and other markets. I have no idea about those, but for the currency markets, they're usually filled. And here's a great example of how to trade it. You can see here's the gap on the Sunday open for Aussie dollar on the 5-minute chart. We're looking down at let me just change this to an arrow. We're looking down at a gap. We're closed here on Friday, and we've gapped all the way up on Sunday. Now, what makes this a good opportunity is not only it's a gap, and we just talked about how the majority of the time gaps are filled, but if I zoom my chart out and look left structure leaves clues, you're going to see that we gapped up and opened right near a very powerful structure level. If I were to bring a DSR level, dynamic support and resistance level, we'd probably get a big red box up here. Now, why is this important? What does this mean? Well, this means that we have a place to put our stops at. And for you guys that have been following me for a while, you know the one thing I hate, the one thing I don't do is put blind stops. My philosophy is heavy on structure and the importance of it. So without a structural level to put stops at, you'll rarely see me take a trade. So knowing there's structure up here, I know that if I'm going to place a stop loss, it really only needs to be a little bit above this level. We're looking at, what are we at here? We're looking at our structure being at 90.66. I can probably get right at 90.70. This is a smaller trade, but I can probably get right above 90.70 and be safe. So we're looking at a stop loss of about this much on this trade. Not too much if you caught this right at the open. Let's make this red for a stop. Boom. Now, where are targets at? Well, two ways to look about targets. You can look at the gap fill. But again, if you're a structure-based trader, you're probably seeing a pretty good structural shelf right here. Looking at this level, if I crunch this out a little bit, looking at this level right here, a zone between this spike high, boom, 90.43, and basically the highs that this market tested 1, 2, 3 times before. So you're looking at targets somewhere in this zone. I always like to be a little bit safe and go with the highs of a zone instead of the closes. That's just me personally. But somewhere in this zone is where you're looking for targets at. And what that does is allow you to have a pretty good risk reward opportunity. We know that even if you're looking for this spike high right here, it looks like you're getting about a 1-to-1. Again, let's make this green. Bang, boom. A little more than a 1-to-1 risk reward on this, depending on where you got filled at. And with trading, there's two things that you want to remember. We want to involve ourselves in two types of trades. We want to involve ourselves in trades where A, the probability of the market rolling over, or the probability of the market doing what we expected and what we predicted to do, is greater than it not happening. And B, we want to put ourselves in position where, well, we're risking less than what we're willing to gain, or we're risking at least just as much. We don't want to risk more than what we're willing to get out of the trade. So in this particular opportunity, we have both of those things lining up. Not only do we have a risk reward that works in our favor, we're willing to gain more here in green than what we're willing to risk. But we also know that with gap trading, the majority of the time, these gaps are filled. So we're involving ourselves in a trade where the probability and the chances of the market following our prediction are higher than it not happening. So that's a quick, easy lesson on how to trade gaps. I don't even want to call it a lesson, but answering a question that many of you probably have. And I just put the post out a few minutes ago, and I'm getting a very, very good response. So I said, hey, why not turn it into a video for syndicate members? And while we're at it, why not just offer it to the public here? So that's gap trading for you. You can also see just looking real time at the market right now. It's President's Day, so the market isn't doing much. But if you want to get fancy and look for a trend continuation opportunity here, there's not a lot of room for expansion, but just pretty cool to see these Fibonacci's line up as well. Looking at Fibonacci retracement, swing high to swing low. We're going to get a 3D2 right at that level, right at our previous structure level. Sticking that up some. Boom, boom. If I take a Fibonacci retracement from our intermediate swing high to swing low right here, and I bring in my minor, we're going to get a 50% there as well. So pretty cool Fibonacci confluence here as well for someone that wants to trade a trend continuation trade off of this gap, meaning we get a break and close below our structure area right in here, this red line. What do? We come back up to retest it with some Fibonacci confluence a few times. Now, again, it's President's Day. Not much movement in the market. I'm not expecting until we break this structure level any type of I wouldn't look for a downward move here until we break a significant structure level or we retrace a little higher. But just love to bring the fibs on because it's pretty cool seeing those line up seeing how everything lines up at the same area. So that's it, guys. We're looking at a potential setup on pound yen. Here's the Aussie yen, or the euro yen we have from last week. The bat pattern rolled over. I didn't get a chance to put this out to you, but we came right into a smaller Gartley as well, or a smaller bat down here as well. So a pretty good back-to-back on euro yen. But let's look at pound yen, the potential cipher setting up as well. Looking at our X leg down here at 69.09, X to A. We got an A to B. We got a B to C extending right to the 171 even handle, coming right into that 127 extension. And as always, for a cipher pattern completion, I'm looking at this 169.52 level, which is at our 786. So as always, stops need to go below X, and we'll be looking to take this up. Profit should be right above that structure level, right at that structure level. Yep, taking it up to 3D2 and 618, which is going to come right at the tip of that structure level. So looking for another opportunity on pound yen to get involved in a bullish move here on the 60-minute chart. Again, it's a potential cipher pattern completion if we push down the 169.52s. So take care, guys. If you're not a syndicate member, join. What are you waiting for? You have no excuses. Check it out. It's going to be great. But I'll see you guys tomorrow, and plan your trade your plan. Take care, guys.